Is Taiwan Semiconductor, ticker symbol TSM, a good stock to buy now? Welcome to Global Value. In today's video, we're performing a fundamental analysis of TSMC using Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Taiwan Semiconductor is worth in today's stock market. Plus, I'll share a special bonus that could be the deciding safety factor when adding TSMC stock to your portfolio. Right now, TSMC trades for $169.62 per share. In its last day of trading alone, it's up 0.28%. Since July of 2023, its stock price is up 70%. This easily beats the market and the S&P 500, which is up less than 25% at the same time. In the last 5 years, Taiwan Semiconductor has compounded at 64.7% annually. Even from their highs in January of 2022 to their lows in October of that same year, the company has delivered one of the top performances since then in the overall market. In the last decade, TSMC is also a top performer, compounding at 24.5% annually. They've beat the market for nearly all of this time. That's pretty similar when we go back before the global financial crisis. They've compounded at 17.4% annually, crushing the market for the last decade and a half. Even better for shareholders, these aren't their only returns. Right now, TSMC pays a 0.95% dividend yield. That's even more when they're added to the gains in their stock. Today, TSMC trades $23 below its 52-week high, and these are still up more than double from their 52-week low. Before their recent run-up and since, they're one of the largest semiconductor companies in the world with a $773 billion market cap. Right now, there are 13 super investors who own TSMC. It's been a great winner in the last year, but the top 6 have all trimmed their positions in the latest quarter. Warren Buffett's investment in TSMC was out of the ordinary. He invested in the third quarter of 2022 and then quickly reversed course and sold out to start 2023. Even still, he made money from this trade. If you had bought the company when he did and held on, you would have made even more. Getting started with our first metric, we want their average return on capital to be above 14%. TSMC does a great job here. They've earned returns from just over 20% to just under 30% in nearly all of these years. Even as a contract manufacturer, they have durable competitive advantages that allow them to earn these high returns. Return on capital tells us if a company creates value. Think of it like your form when you're in the gym. You want great form and you want great value. In a given year over this time, they earn 24% returns, which are 3 times better than your average company. This is a huge check that's way above our benchmark, and it's a solid start for the company. Now, what does TSMC really do? Taiwan Semiconductor Manufacturing is the world's largest dedicated chip foundry with over 60% market share. TSMC was founded in 1987 as a joint venture of Philips, the government of Taiwan, and private investors. It went public as an ADR in the United States in 1997. TSMC's scale and high-quality technology allow the firm to generate solid operating margins, even in the highly competitive foundry business. Furthermore, the shift to the fabless business model has created tailwinds for TSMC. The foundry leader has an illustrious customer base including Apple, AMD, and Nvidia. These companies look to apply TSMC's cutting-edge process technologies to their own semiconductor designs. TSMC employs more than 73,000 people, mainly in Taiwan. A lot of it has to do with their growth, which we want to see here in metric number 2. We want their sales, earnings, and free cash flows to be up. Like you're in the gym again, if you have great form, you want to start adding more weight. Growth does that for businesses. From 2019 until today, their sales have nearly doubled. Their earnings have nearly doubled, and their free cash flows have nearly tripled. It's huge growth across the board, and it's exactly what we want to see with their high returns. It's another huge check here. In metric number 3, we want earnings per share growth. This helps look at the company from the view of an individual shareholder. In this time, their earnings have more than doubled and their shares outstanding are roughly flat. This means their earnings per share have grown at this rate as well, and it's a solid check here on metric 3. Metric 4 is similar but even more important. Because free cash flows are the lifeblood of a business, we want free cash flow per share growth. It's almost the same story here, and it's another check on metric number 4. Their cash flows per share have nearly tripled. So far through 4 metrics, TSMC is perfect. We'll find out if they can keep this up after we look at the company's dividends. Right now, TSMC pays a 0.95% dividend yield, but is it safe? That's what we're looking at here. We want their dividends to be covered by their cash flows, and unfortunately that hasn't been the case in all of these years. In 2023, they paid out more dividends than they brought in cash that year. Thankfully, this was covered from a big difference in 2022, and they've cut their dividends somewhat since then. They easily support those smaller dividends today with higher cash flows, and it's exactly what we'd want to see. This is a check on our dividend bonus. Now, great companies can grow, earn high returns, and don't need a lot of debt. TSMC is no different. They've had net cash in the last 5 years, which means they have a huge cash pile on their balance sheet. At the same time, they brought in $53 billion of free cash flow. Their numbers look extremely healthy, and it's a massive check here. Things are still perfect for the business. Now it's time for our safety bonus before we figure out how much they're worth. The father of value investing and Warren Buffett's teacher, Ben Graham, wanted to see a current ratio greater than 1.5 times if you're picking individual stocks. This is key for their short-term liquidity for how they can pay their bills. TSMC passes here with flying colors. Right now they have a 2.4 times current ratio and they look very healthy from the numbers. It's another massive check and they're still perfect. Now what are they worth? The big metric of them all, metric number 6, is also our first valuation. We want their average free cash flow divided by their enterprise value to give us a yield that's greater than 5%. This matches the historical return from the S&P 500 and is bigger than the 10-year treasury currently. Enterprise value adds their market cap and their net cash together, so it helps us look at the company like it's a private business. In an average year over this time, they're bringing in $10.6 billion of cash flows. When we divide that by their enterprise value, it only gives us a 1.4% yield today. In their last 12 months, they brought in $14.5 billion of cash flows, which are their highest over this time. Even still, that's only a 2% current yield, and this is an X on metric number 6, our only one of the day. But don't just throw TSMC out. We still have 2 more valuations to credit their growth before we put them together at the end of the video for their final fair value. Next, our second valuation uses a DCF model. Here we'll take an average of their cash flows and use historical assumptions to grow them into the future. Let's assume they grow their average cash flows at 13.4% annually in the next 10 years. Then in the following decade, we'll assume this growth is cut in half and they grow at just under 7%. We'll also add in their tangible book value to credit them for their net worth. Then let's look for a market-beating 15% rate of return, which is what Warren Buffett wants to see. With those assumptions, a DCF valuation for TSMC says their fair value is around $64 per share. That's very close to the price that Buffett bought the company at. They've also been very predictable over this time, which can help us see that this company may be overvalued. It looks like that's the case in our third valuation, which only clocks in at $129 per share. This is based on past multiples and future assumptions for their growth. Historically, they've traded around 16.5 times earnings, and today they trade at 30 times earnings. Future returns will likely be nowhere near their past. Now, Warren Buffett likes the numbers, but it's the qualities of a company that are his true love. Let's learn what these are for TSMC, which got him to invest in the company through a long and a short thesis. Why don't we start with the long thesis first? Number 1, TSMC should consistently earn higher gross margins than competitors. This is thanks to its economies of scale and premium pricing justified by cutting-edge process technologies. Number 2, TSMC wins when customers compete to offer the most advanced processing systems using the latest process technologies. We're seeing a ton of that right now with AI, which is fueling the demand for GPUs from TSMC. Number 3, TSMC will benefit from more semiconductor firms embracing the fabless business model and internet giants designing their own data center chips. But it's not all positives. Let's look at a short thesis as well. Number 1, although TSMC is the foundry leader, each generation of process technology matures and commoditizes quickly. This forces the company to deal with pricing pressure and never get too comfortable. Number 2, TSMC's new approach to diversify production geographically may add cost pressures with little added resilience to stability. The vast majority of their chip fabs are still in Taiwan. Number 3, Samsung and Intel are committed to heavy capital spending under the support of the US government. SMIC and other state-supported Chinese foundries also lurk as potential threats. Now let's put everything together for TSMC. In our fundamental review, we learned the company goes 5 for 6 on the Select 6 analysis. They look very healthy by the numbers with high returns, huge growth, and a solid cash cushion. After rebounding from 2022 lows, the company is only off when it comes to their valuations. What was discounted then is being priced at a premium now, even if they're off their all-time highs. Please remember this isn't financial advice. We can look at TSMC's fair value shown through our investing tools. Today, this only comes in around $94 per share. That's up just $10 from their 52-week low, and it's way below their current stock price. TSMC looks overvalued. If you're interested to find undervalued stocks, then sign up for our investing tools and get exclusive bonus coverage of 103 stocks and counting.